Well, hello there. This is Slav Flinsky of Slav Flinsky Homes in Downers Grove. And I hope all of you are doing well and coming to you with another real estate and mortgage update here as we're approaching the fall market. And today with me, I have Michael Gampetis of Proper Rate. How you doing today, Mike?
I'm great. How are you, Slav?
Fantastic.
Good.
Last time we talked, you were with Guaranteed Rate. So why don't you take a moment to introduce yourself, tell everyone a little bit about you and how Proper Rate came about.
Sure, I'd love to. So Proper Rate is a joint venture between Guaranteed Rate and At Properties. So each company has 50% ownership in the company, Proper Rate. So we launched officially July 13th, so we're a couple months in, and it's going great. So what it does is it gives all the advantages to a world-class lender like Guaranteed Rate, all the marketing, the digital aspect of it, the great rates and programs. But then we join forces with At Properties officially to be able to continue to further the servicing of the real estate market, mostly in Chicagoland. So very excited about it, and it's been going great.
Yeah, fantastic. I mean, it's been kind of a great collaboration. Wonderful thing with At Properties. So we have At Properties, we have Proper Rate, and we also have Proper Title. It really gives clients the one-stop shop experience, and there's such great communication between all three divisions that really simplifies and relieves any kind of stress from the buyers and sellers, knowing that things are taken care of and everyone's communicating with each other on a timely basis.
Right, and I think it goes along with what you even preach in your business, right? Is the concierge level service.
Exactly.
Just being able to provide every level of service to your clients.
Yeah.
Yeah.
So this has been an interesting year, hasn't it? 2020, with all that's been going on with the COVID-19 pandemic, changes not only in the real estate mortgage industry, but in everyone's lives. What have you seen as kind of the biggest challenge in the mortgage industry this year compared to maybe previous years?
That's a great question. I feel like the biggest challenge that we're dealing with now is, obviously the market is being driven right now by the lowest interest rates that we've seen in the history since we started tracking rates in the late 60s, early 70s. So I would have to say the challenge that most lenders have is just being able to, deal with the volume and be able to manage that. The way that we have kind of separated ourselves in that is always taking the purchases as priority over the refinances. As I'm sure you know, a lot of people, if you have a mortgage right now, more than likely you're looking at refinancing it if you haven't already, simply because interest rates are at all-time lows. So we as a company have always prioritized purchases over refinances. So our teams, all of our vendors, everybody knows that when purchases are happening, those take precedence over the refinances. So a lot of the delays and all of those things that you're seeing with most lenders, we typically don't have, simply because of the priority that we give to that.
Yeah, one of the things that I've seen, especially when representing sellers and the buyer's agent comes in with a different lender, is the lenders, there's certain lenders that maybe don't have the strength behind them, such as Proper Rate, that we come across challenges and many delays just because that they're just not equipped to handle the volume of, number one, refis and the amount of buyers that are coming in. I've had several deals come close to falling apart where our sellers were getting tired of the delays and they said one more delay and we're canceling the deal. And so it's very refreshing working with somebody like you in Proper Rate, knowing that everything is going to be taken care of. And I'm always pleasantly surprised, and I shouldn't be at this point, in how quickly and efficiently you get the deals done and the clear to close.
Right, and I think you hit on it earlier with the team, right? So behind me is an excellent team, and I rely on them quite heavily to be able to help me in managing the process and getting things done efficiently. So there's steps that we follow all the way throughout the process, and everybody is in constant communication the whole way through to make sure that every step is taken. And also, if things are needed, we're not afraid to ask. So, we can try to avoid any potential pitfalls right from the get-go.
Sure, sure. And we definitely appreciate that. One of the questions I get from clients right now is, is this a good time to buy? Should we wait till next year? What's going to happen when the election comes around? And that's a tough one to answer. Typically, election year, things do slow down just because of the possible uncertainty. So far right now in mid-September, I'm still seeing a lot of volume, a lot of buyers out there still looking for homes. What do you see as far as the future of the mortgage industry going into this election year? And what do you see as interest rates being maybe next year, even as we pass that, into 2021?
Well, yeah, and I think what separates this year from any other year, any other election year that I've been a part of in my 20-year career is the fact that the spring market was delayed, right? So now the summer market is basically taking over for the spring market. So that's the reason why now contracts are coming in at a much higher pace in September, October than they would have in years past, simply because people waited a little bit longer than they normally would have, when they typically go in the spring. So that coupled with, excuse me, lower interest rates is definitely what keeping the real estate market thriving, especially in Chicagoland. And then, with regard to interest rates, typically toward this time of year with the slowdown in the market, maybe you'd see higher interest rates. But the Fed just recently announced that interest rates are going to stay low through even 2023. So what does that mean for us? Well, that means that the real estate market will continue to thrive as a result of that. So I'm a firm believer in the fact that even though I don't have a crystal ball, that interest rates will stay low definitely through the end of the year, regardless of what happens with the election, just simply because that's what's keeping the economy going, keeping people out there, and buying. Consumer confidence is high. I truly believe that interest rates will stay low, maybe within a quarter of a point in the next 12 months.
Yeah, and that's great news for both buyers and sellers. Buyers giving them more purchasing power, and sellers knowing that the buyers will be out there if they're considering selling their home now or in the near future.
Right, and I think you could speak to it more than anybody else can. Is really, I think the only struggle, right, is inventory. So that's the only thing that I'm seeing right now is I have buyers lined up with pre-approvals ready to go that might be having trouble finding a home simply because there isn't as much inventory and things are just moving really quickly.
Yeah.
And that's great in a sense where if you have sellers, right, you can urge them to, if they're sitting on the fence potentially about listing their home, you can definitely urge them to do so because there's a huge pool of buyers out there, ready to go. Have you been seeing that a lot yourself?
Oh, exactly. I still have buyers waiting for the right house. And I tell them to be patient because even with just our business, I have sellers contacting me even now in September who are interested in putting their home on the market yet this year, where typically as we approach the end of 2020, that really dies off completely and people usually wait until the following year. And this year, again, everything's different and we have buyers putting their home on the market fresh in the fall months. So
Got to keep the weather warm.
I think we mentioned before and we talked about is the pre-approval process, how the mortgage industry has changed and how has it affected people who are self-employed?
So that's been the one significant change we've seen in the last few months is that Fannie Mae and Freddie Mac and even on the jumbo side, all investors have really tightened their guidelines regarding self-employed people. But I don't want to send the message out there that they're not still getting mortgages, because I have a good percentage of my buyers and clients that are self-employed, and we're still closing loans. What I'm urging people to do that are in that position, that are self-employed, is really do their due diligence. Get with me. Let's talk about what's going to be needed well ahead of time, so that we don't get into a situation where we have a 30-day close and they're finding out that they need to get profit and loss statements, balance sheets, business bank statements, things like that. So people are, well prepared for that. So really what the main change has been in light of COVID is that we really need to document 2020 and how their business has been impacted by this. And the way that we're doing that is with what I mentioned earlier, depending upon whether it's a conforming loan or whether it's a jumbo, is profit and loss statements from their and balance sheets from their CPAs, business bank statements just showing that deposits are level with where they should be. So again, it's really just having to do a little bit more due diligence on their end to make sure that they're ready to buy.
Oh, yeah, that's great news. So question I have is, does that apply to both home purchases and refis?
It does. It does. Yeah. And across the board, it doesn't matter whether you're purchasing or refinancing.
Okay,
If you're self-employed, the documentation needs to be there.
great. That is, I think it's important to know. There's a lot of people who are self-employed today. So it's more incentive for them to make sure that if they're considering purchasing a home or refinancing, start getting all of their ducks in a row in order to provide a very smooth process, right?
Right. And one point of clarification is what you are classified as self-employed if you own 25% or more of the business. So,
Got it.
yeah.
Well, Mike, I really appreciate having conversations with you about the mortgage and real estate industry. I think very important, especially with these changing times, to keep our clients and people out there who are interested in buying or selling a home, or just if they own a home and interested to see, where the real estate market is going, to keep them informed. So I truly appreciate your time and your expertise.
Same here, Slav. Thanks.
You're welcome. Well, again, it's been a joy. You have a great day and weekend. And this is Slav Felinski, Slav Felinski Homes. Have a great one.